Hey, today I want to speak about the power of order blocks and which ones are more likely to trade and actually work. When checking out the power of a power block, there are 4 key factors to consider. The first one is the concept of fair value gap, often represented by the abbreviation FVG. You'll notice it goes by different names in various styles, like gap, IFC. Now, let's explore the concept of FVG, which stands for fair value gap. It indicates the momentum when price exits an order block. What does this mean? Essentially, it suggests that the price possesses enough strength during its departure from the order block such that there is no overlap between the shadows of the order block's candle and the shadows of the current candle. In this condition, we say that the price has created an FVG. Therefore, this block order is a powerful block order for us. In this example, we observe that the order block formed is considered a weak order block. This is due to the fact that it has been so weakly established that it failed to create a fair value gap, FVG, after its formation. Additionally, there is no significant gap between the shadows of the candlestick that represent the order block, indicating that there is an overlap. The absence of a gap and the overlap between the shadows of the candlestick reinforce the classification of this order block as weak in terms of market dynamics. Consequently, this weak order block may not provide reliable support or resistance for future price movements. Therefore, this block order is a powerful block order for us. The next crucial concept to understand in the context of price movements is structural breaks, which refer to the price action that occurs when the price exits an order block. For a price move to be considered significant, it must break a preceding structure, indicating that a change in market dynamics is taking place. In this framework, we define a break of structure, BOS, in the direction of the prevailing trend, where the price's exit from the order block aligns with the ongoing market momentum. Conversely, when the price breaks a structure against the direction of the prevailing trend, this is referred to as a change of character, CHOCH. In this case, our order block has high credibility. The next concept to discuss is unmitigated or mitigated in trading. Unmitigated refers to a situation where a price has not yet interacted with a specific order block. If a price does encounter that order block, it is then considered mitigated. In trading, we typically focus on order blocks that are unmitigated, meaning they have not had any previous interactions. This approach is significant because unmitigated order blocks can offer more reliable levels of support or resistance, as they represent price zones that the market has not tested yet, potentially indicating stronger price reactions when they are eventually approached. When the price reaches a certain level, this presents an opportunity for traders to enter a position. However, if the price interacts with this order block and then moves upward, only to subsequently return to that same order block again, traders typically disregard it for future trades. This is because the repeated interaction signifies that the order block has been consumed or weakened, making it less reliable for predicting future price movements. The last aspect we examine when assessing an order block is liquidity accumulation. It is advisable to pay close attention to the liquidity gathering process that occurs when the price moves away from the order block. This factor is significant because its observation indicates that the order block in question is particularly strong. When liquidity accumulates ahead of a price movement, it suggests that there is considerable interest and activity in that price range, reinforcing the validity of the order block as a point of market support or resistance. I hope this information has been helpful to you. Wishing you prosperity and success.